what's going on with the share market at the moment? It's defying these trends, these forecasts from the IMF, and we've kind of entered a bull market.
Yeah, exactly right. We've moved, particularly the Dow, it's moved right out of bear market territory with about, 550-point gain this morning. And last week, over 4 trading days, up about 12.4% or something, which is the biggest ever rise for the Dow Jones in 1 week. It was only 4 days, by the way. So how can we be ignoring the fact that the IMF is telling us there's going to be the worst recession since the Great Depression? Well, what the IMF is telling us is about as surprising as being told it rains a lot in the UK. Everyone expected it, and economists are just guessing the number. I think the really big part of the news this morning, Pete, which partly explains why the stock market's going up, is that they're talking about being a V-shaped recovery. Now, in the world of crazy economists, we have 3 types of recovery. One's a V-shape. We go down rapidly, then we rebound rapidly, that's your V. There's a U-shape where you go down, you hang around a bit at the bottom until things get a bit better, and you start rising then. That's U-shape. And there's L-shape, which is down. You go sideways for a long time. Now, there was a lot of time, like 3 or 4 weeks ago, where people were saying it's either going to be U or L. But because of the fact that the virus seems to be being beaten in the scary places like Italy and Spain, and the views on the USA will get better by the end of the month. The stock market's believing this, and therefore they're then saying the restriction and the period of restrictions is going to be a lot shorter than was initially expected. And so that is all being factored into the stock market, and that's why the stock market's recovering. If we find that that's wrong, that the virus doesn't go away as quickly as we expect, or that the restriction period is longer than expected, then I think the stock market would sell off.
Is there a danger of this being a false dawn, though, Peter, that, once businesses start reporting higher than expected losses in coming weeks, wouldn't it come back down again and then investors lose their money again? I mean, is there a danger of pulling the trigger too early here?
Yeah, most definitely. And if you look at the history of bear markets, Pete, you usually get 2 big legs down.
Right.
Now, that's the history of bear markets, but we know this particular bear market is historically an outlier. Like, when was it like a global government created crash by all deciding to close down businesses and lock up their workers? This is so rare. Old historical economics may well not explain what's going to happen. And that's what the market's betting on at the moment, that this is such a rare thing. We'll get the big down and we'll rebound quickly. They could be wrong. History could be proved right. The bear markets have 2 big legs down. But I've got to say, some of the like Howard Marks is one of the most famous guys, probably behind Warren Buffett, when it comes to market predictions in the USA. And he came out yesterday on Bloomberg and basically said that it would be a mistake not to be offensive with the market, meaning going on the attack, buying stocks right now. And he comes from the bond market where they play it pretty cautiously. So there's a lot of people out there believing that this is going to be one bear market with 1 big leg down. There'll probably be sell-offs, people taking profit. But the question is, and this point that you raised, could it fall again and people lose by getting in? At the moment, the market's betting that's not going to happen. The market could be right or could be wrong.
So a V market, but could there be more little Vs to come? Well, I guess that'd be a little W.
Yeah, yes.
But maybe not as low as that V, as you mentioned there. Maybe we have hit the bottom now, and it's probably a decent enough time to get some pretty good blue chips at half the price than they were a month ago.
Well, this is exactly what Howard Marks said. He said it's impossible to pick the bottom, but if you're a long-term investor and you're looking at a stock that was, say, for example, let's take CBA. It was $90 a few months ago. It's now around $60. So if you're a long-term investor, you'd make the bet that over the next 2 or 3 years, probably CBA will crawl up into the 90s again. And therefore, the fact you're taking a risk on a high quality...
It will take a while, though, wouldn't you think?
Correct. Unless the V-shape is unbelievably good. And by the way, the IMF has said Australia will contract by 6.7% this year, but we rebound by 6.1% next year. We still end up in a lesser position, but in that rebound period, and if we are growing at 6.1%, companies like CBA, which are leveraged to the improvement of the Aussie economy, they're bound to do well. And similarly, travel companies that got their butts kicked because they're basically closed down. Once international travel reestablishes itself, and it may well take a year, even a year and a half, you expect their share prices to improve from where they are today. That's my best guess. It's not advice, Pete, of course.
Just quickly, I don't mind the look of Woodside Petroleum share price at the moment, Pete. What do you think?
Well, look, Pete, I bought it 2 weeks ago.
Oh, did you? Okay, that's just when I was looking at it.
Yeah, and the reason was, and we were reporting it here, that the OPEC were looking close to an agreement, and Donald Trump was, sort of putting pressure on them. But the thing is this, oil price gambling is very hard, but look, if the oil price improves, you'd expect WPL or Woodside to do well. But look, Pete, this is my best guess. It's not advice,